Durgesh bhai.
Good evening to one and all. It's indeed a pleasure to welcome all of you at this global webinar on sustainability reporting maturity model. The President of ICAI, C. Nihar Jambusaria ji, the Chairman of SRSB, Sanjeev Singhal ji, Mr. Stathis Gold, Mr. Terence Yathiraman Ratnam, Raj Malik, Surbhi Gupta, Vice President Devashish Mitra ji, and Dr. Nandita Mishra. A warm welcome to all of you. A very good evening to all the participants too. Sustainability Reporting Standard Board of the Institute of Chartered Accountant of India welcomes you all to this wonderful webinar, which is a different kind of webinar known as for Sustainability Reporting Maturity Model version 1. Since past few decades, we have witnessed voluntary or compulsory sustainability reports being published, which makes it clear that the global markets and investors are demanding reporting of non-financial information. Sustainability disclosure facilitates the investment community capacity to evaluate company processes and performance for identifying, managing, and measuring ESG risk and opportunities. It also helps to establish and maintain trust between a company, its shareholder, and other stakeholders. BRSR, broadly known as Business Responsibility and Sustainability Reporting, provides an opportunity to businesses to disclose non-financial information in comprehensive manner in line with the globally well-recognized sustainability reporting framework. BRSR focuses on the adoption of responsible business practices in the interest of the businesses, social setup, and the environment on one hand, and explain how an organization impacts the environment and society or time together with its governance perspective on the other hand. Sustainability Reporting Standard Board of ICAI has developed SRMM, Sustainability Reporting Maturity Model version 1, with a view to enable organizations to measure their sustainability performance in terms of 4 levels of maturity of sustainability reporting, namely level 1 to level 4. The model would assist organizations in not only assessing their present maturity level vis-a-vis sustainability reporting, but also in identifying improvement areas for reaching higher levels of maturity. In the present scenario, professional accountants needs to focus on integrity and integrating significant natural and social capital issues into management information and provide clear communications to facilitate transparency through stakeholders and communication and disclosure. Professional accountants should gain knowledge about the sustainability reporting frameworks as well as other guiding principles. So here the SRB is playing a big role in building the capacity of all our members. The global webinar is being organized today with an objective to bring in awareness about the need of the sustainability reporting maturity model, its advantage and challenges lying ahead of all the stakeholders. Sustainability Reporting Standard Board of ICAI is working persistently towards upskilling the members in the emerging sustainability ecosystem for contributing in attainment of global call of sustainability through its various activities, including research, developing assurance standards on areas related to sustainability, conducting webinar and capacity building programs, awarding best practices, and partnering with the government, regulators, and other bodies. The board has taken this initiative to bring together global eminent speakers, and it's our proud privilege to have them for deliberation on this very pertinent topic of sustainability reporting maturity model. With us, I welcome you once again. I welcome you all once again, and I also welcome all the participants. I thank you, and over to Chairman Sanjeev Singhal.
Thank you very much, Durgesh Bhai. A very good evening to one and all present. It gives me immense pleasure to extend a warm welcome to all the speaker and participants in this truly global webinar on Sustainability Reporting Maturity Model version 1.0, organized by the Sustainability Reporting Standard Board of ICAI. I think no discussion today is complete without sustainability. Recently, our Honorable President gave an interview and there was a long discussion on sustainability therein as well. We are extremely thankful to our Honorable President, ICAI, CA Nihar Niranjan Jambusaria ji, and the Honorable Vice President of the Institute, CA Dr. Devashish Mitra ji, the highest torchbearer of the profession today. And I also thank my Vice Chairman, CA Durgesh Kabra ji. Friends, I said it's a truly global webinar. We have among the panelists, Mr. Setish Gold, Director Advocacy, IFAC, who has joined us from the United States. Mr. Terence Jeratnam, who is the Australia Senior Advisor to the SASB, who's joined us from Australia. Dr. Nandita Mishra, who is the IIRC Ambassador and who joined us from Sweden. Mr. Raj Malik, Senior Executive Vice President from Reliance Industries, joining us from Mumbai, India. Surbhi Gupta, GM Compliance and Monitoring Division from Security Exchange Board of India. So that's why I say it's a truly global webinar. Right from very early morning to very late evening, all time zones are present here. There is obviously no historical precedent for the magnitude of the shift in the investor focus that we have witnessed over the last decade and last one and a half years since the onset of COVID. The focus on sustainability is immense. And the distinction between what is good and what is profitable, between what is sustainable environmentally and what is sustainable economically, between acting in pursuit of the public interest and acting to maximize the bottom line is increasingly diminished. Not only have we seen a tremendous shift in capital towards ESG and sustainable investment strategies, but ESG risk and matrices now underpin many traditional investment analysis on investments of all type. In fact, investors are playing down, the market cap of those organizations is going down who are not taking care of the ESG aspect or the sustainable development goals. And globally, the corporates have embraced sustainability factors and matrices as significant drivers in decision-making, capital allocation, and pricing. We strongly believe all initiative and practices towards responsible business conduct, transformation, and growth needs to be put before all these stakeholders in a standardized and consolidated manner. In India, the seeds of sustainability reporting were sown in 2011 in the form of National Reporting Guidelines on Social, Economic, and Environmental Responsibilities of Business called NVGs, which were revised in 2019 as National Guidelines on Responsible Business Conduct. ICAI, because we have a large number of international audience present. In fact, more than 1,300 people have already joined a short while ago on this topic of integrated reporting. ICAI complements Ministry of Corporate Affairs and Indian regulators to proactively and strategically make up gradation in sustainable reporting framework of Indian corporates by releasing report of the Committee on Business Responsibility Reporting. The report gives new comprehensive framework for business responsibility and sustainability reporting called as BRSR. The formats are developed for all companies, listed as well as unlisted. Recently, Security Exchange Board of India has decided that it will be mandatory for top 1,000 listed companies by market cap from financial year 22-23 and voluntary from 21-22. And we are also aligning our integrated reporting awards with the same. Right now, we give 3 integrated reporting awards, and given the higher focus, the Honorable President, Vice President, and the entire Council has approved a higher number of awards and some specific awards focusing on the BRSR reports. And what we have done is that we have prepared a comparability index of this BRSR in the form of sustainability reporting maturity model, a dashboard whereby a company can score from 0 to 300, and we divided them into 4 categories. 0 to 75, 76 to 150, 151 to 225, and 226 to 300 marks or the scores. And only those companies who are leading by examples by giving the leadership indicators, because it has a minimum disclosures plus the leadership indicators, only those companies who score marks in leadership indicators will be actually able to fall in the category 4, which is leading by example. So this is a new initiative of our SRSB, as we call it, and this model is called as SRMM, Sustainability Reporting Maturity Model version 1.0. And this acts as a self-assessment tool. And to the best of my knowledge, probably, this kind of a tool does not exist anywhere else. ICAI is committed towards research activities, capacity building, and training of our members to enhance their professional skills in general. And SRSB is committed to enhance the skills of our members in this field. That is why we are running now the 4th batch of online certificate course on BRSR. 3 batches have been completed and more than 100 members have already cleared the exam. As a chairman of the board, I would like to present various initiatives taken by the board so far within 14 months of its inception. And I'm also happy to share that it is the sheer vision of our Honorable President, Vice President, and entire council member. Now it's been decided that all the buildings of ICAI in future will be green buildings, and we will try to achieve 5-star rating. We have always acted as a responsible institution, and we continue to do so by becoming the leader in the area of sustainability as well under the leadership of our President and Vice President. Some of the initiative that our board has taken in last 14 months: publication on sustainable development goal with an objective to create interest and develop understanding of members towards the same, publication of the background material on BRSR, release of the assurance standard on greenhouse gas emissions, development of a corporate film on simple steps to make our planet sustainable. And with a view to develop interest of our member in sustainable development goal, we identify champions of SDGs, whereby we issued the UN fun quiz and invited suggestions from our member on how to reduce carbon emissions. We organize as many as 6 webinars, including the global webinars and virtual CP meeting on the concept of sustainability. And in our endeavor to promote policies and regulations towards achieving sustainable development, we are holding meeting and interaction with the national and international bodies as well as the regulators. I'm happy to share that we actively contributing to the Social Stock Exchange Task Force of the Security Exchange Board of India, and we are doing a joint project with IIRC on integrated reporting. We also submitted our comments on IFRS consultation paper on sustainability reporting, and as I said, we are starting the ICAI Sustainability Awards, and the board is striving for much more. Various initiatives are under progress. For example, the publication on board's role with respect to sustainability, identify industry-specific issues relating to sustainability reporting, formulating new standards on non-financial information, formulating the social audit standards, and developing this thought leadership research paper along with IIRC. Board is committed to work relentlessly and contribute towards developing strong sustainability ecosystem in the country and globally as well, because I believe now there is no space for profit alone. One has to focus, as our Honorable President says, 3 Ps: people, planet, and profit. And I believe that is the foundation on which our board has been constituted. With this, I would now request our Honorable Vice President, CA Dr. Devashish Mitra ji, who has done his PhD in IFRS, very, very contemporary subject, and who's a master of the corporate laws, and can beat anyone on the accounting standard, auditing standard, corporate laws, and he is full of energy. And we also have audit quality maturity model, which he is the pioneer, which we are going to release very shortly. So we're very fortunate to have our Honorable Vice President, CA Dr. Devashish Mitra ji, and I would request him to kindly share his thoughts with us, and rather among the entire global community which is watching this program. Over to you, Devashish bhai.
Thank you very much, my council colleague, Sandeep Singhal. And thank you very much for hyping me up The expectations have gone up, and I am also feeling a bit under pressure because of the hype that you have created. And the, the president of the Institute of Chartered Accountants of India, Neha Jambusaria, and of course, Durgesh Kabra, my council colleague and the vice chairman in this committee, and so many speakers from all over the globe. You have already named them, Sanjeev Bhai. I don't want to name them, but I can see Nandita Mishra has been a very, popular face in the last, all the meetings that I have been attending. So, welcome to you. Welcome to Mr. Gold, Mr. Raj Malik, Mr. Terence, and so many of you. A very, very good day to all of you. I wouldn't say good evening, but you see, since you all are from various time zones, a very, very good day to all of you. Sanjeev Singhal and Durgesh Kabra, both of them, of course, they are talking about the sustainability reporting maturity model, but they have had a huge contribution and another model which was developed and which is going to, see the light of the day very soon. He was talking about it, audit quality maturity model and the audit quality indicators. Always like to, Sanjeev Bhai, can you hear me? You can hear me, I
yes.
hope. Yeah.
Yes.
Yeah. I always like to talk a bit about the background of the history of, whatever we are discussing today. So, both these gentlemen, Durgesh Kabra and Sanjeev Singhal, they worked so hard on the audit quality maturity model. We developed it and now we are going to release it. We are going to make it recommendatory in the first 1 year. And along with that came this sustainability reporting maturity model. And please note, about 2 years back, when Sanjeev Singhal was made the chairman of this committee, many of us, we thought that what exactly will this committee do? And let me tell you, over a period of time, under his leadership, the committee has, worked wonders. And today we are in a position that, we are trying to develop a model, which I'm sure, will be well accepted, not only in India, but all over the world. And we also have, the president of the institute, Neha Jambusaria. And now I'll talk about the sustainability reporting standards. About a few days back, both of us were having a meeting with the Institute of Chartered Accountants, England and Wales. And when the meeting was about to end, the president of ICAI asked Neha Jambusaria sir that what will be one area in which we think that we can really collaborate very, very closely. And without thinking too much, the president said sustainability reporting standards. So such is his commitment to this, and I'm very happy that the president is here and going to speak about this. But today we have come a long way. As Sanjeev Bhai was telling us, earlier, profits and sustainability was really, having an inverse ratio. You thought that, if you want to have lot of profit, or if you want to do well financially, you should not think much about the sustainability factors. But today, the situation has totally changed. And it has become totally complementary. Both these aspects have totally become complementary. And with SEBI now coming up with this business reporting and sustainability reporting requirements, and she's saying that 1,000 top listed companies have to follow that. And SEBI, for those of us who are from US, SEBI is Indian equivalent of SEC in US. Securities Exchange Commission, say that Indian equivalent of that is SEBI, Securities and Exchange Board of India. Now, they are insisting that for listed companies, you must have this business responsibility reporting. And that they are making it, recommendatory from the next year, that's 21-22, and mandatory from thereafter for 1,000 top companies. With this kind of requirements, this board started acting very, very, started getting very active. And today, if you see this discussion on the maturity model, version 1.1, it only speaks of the kind of efforts that the members of this board has put in over a period of time. I have no doubt that today's discussion will be extremely worthwhile for those who are participating, who are the panelists, and it will be also worthwhile for this, huge number of delegates who are listening to all of you. At the Institute, we believe that it is very important that we move away a bit from the usual trodden path of audit, that is financial audit, from taxation, and go into newer areas. Today in the morning, I was speaking on the insolvency resolution professionals and the valuation professionals. I was speaking to them. And, let me tell you, about more than 60% of the insolvency resolution professionals are all chartered accountants in India. So we are taking them to an area which might be a bit different from the usual area to which they have been accustomed. But we are extremely proud that we are the leaders in these kind of areas. And a board like, Sustainability Reporting Standards Board is doing human service on this. And I once again compliment Sanjeev Singhal and Durgesh Kabra, the chairman and vice chairman, for all their active efforts. And to all of you for having participated in the activities of the board. And I have no doubt that today's webinar will be a great success and will be a big step forward towards developing the sustainability reporting maturity model, to which so many of us are looking forward to. Needless to mention, I wish the webinar great success. Thank you very much.
Thank you very much, Honorable Vice President Dr. Devashish Mitra ji. I would now request CA Durgesh Kabra ji to kindly introduce and invite our Honorable President CA Nihar Jambusaria ji to share his thoughts.
Thank you, Chairman sir. It's my pleasure to welcome CA Nihar Niranjan Jambusaria ji. He is the President of the Institute of Chartered Accountant of India, a very humble person, very techno-savvy as well as very technically sound in the area of taxation also, and a person who speaks from the heart and take care of the profession at large, and has represented our institute across the world on various committees of the world bodies as well as a representative of India. With this, I request Nihar Niranjan Jambusaria ji, the President of ICAI, to please address all of us.
Thank you, Durgesh ji. Vice President C.A. Devashish, Chairman and Vice Chairman of this board, C.A. Sanjeev Singhal and C.A. Durgesh Kabra, Dr. Nandita Mishra, Satish Gold, Terence and Surbi. Let me at the outset compliment both the Chairman and Vice Chairman for coming out with the Sustainability Reporting Maturity Model number 1, which is a unique one, and probably it is not there in any part of the world. And let me tell you, that in India there was awareness about integrated reporting and sustainability, but very few companies were very serious about it, whereas the others were not reporting. Last year at the Institute, we thought that this initiative requires due attention. And even at Institute, we must have a separate board to deal with sustainability issues. So this board was formed, and from the initiatives which the board has taken, you will appreciate. And let me tell you, globally, I have seen sustainability efforts are being done for more than a decade, whereas in India, it is comparatively new. In last 2 years, this board has done tremendous work and has caught up on the speed and has tried to come closer to what the world is doing. Today, at this global webinar, I'm sure that all the participants will have Indian version, global version, and they will immensely benefit from this seminar. With SEBI making it mandatory for 1,000 companies to report on integrated reporting from next year, and our government, the Ministry of Corporate Affairs, set up a committee on business responsibility reporting, which has come out with business responsibility and sustainability reporting standards. So with this, the seriousness will increase, and I personally feel that going forward, SEBI will have to come out covering more and more companies under sustainability reporting. Look at the condition of the world today. Since last year, we are experiencing that climate is one issue and health is another issue on which we have to address very aggressively. Apart from this, the SDG goals which have been set by UN, they are all important and relevant. In India, we have taken up many such goals on which we are working, and I am sure that with whatever discussion will take place today, India will get good guidance from this webinar, and this sustainability reporting maturity model 1, which is divided into 4 levels. And I compliment the board that for award purpose, you are recognizing only level 4 companies. That is, those who achieve excellence will only be considered. The others will not be considered. So to maintain the standard, it is necessary that you consider the top companies who reach level 4 and then decide out of that who is the deserving company and give awards. Giving away awards will also speak a lot about our seriousness, and many companies will be encouraged to go for very serious sustainability reporting. And with the Prime Minister himself talking about triple bottom line, profit, people and planet, I think we all need to be very serious about sustainability. A profit we have earned, reported and cherished for many years. But now it's a question of sustaining the earth itself and pursuing all the goals which are set up by UN. My best wishes to this webinar, and I'm sure from time to time you will improve upon this model to cover the newer initiatives in sustainability area. Thank you so much for inviting me.
Thank you so much, sir. Your guidance is always very, very valued. And with this, sir, I would now like Durgesh Bhai to introduce Dr. Nandita Mishra and ask her to make a short presentation. Our request to you, Dr. Nandita, would be, since Terence has to leave in half an hour from now, so if you can complete it in 20 minutes, and then maybe 10 to 12 minutes, we'll take up questions and ideas from Terence. So, Durgesh Bhai.
Thank you, Chairman sir. Dr. Nandita Mishra is the ambassador of International Integrity Reporting Council, known as IIRC. Dr. Nandita Mishra is a researcher and academician for over 2 decades. She is ambassador to IIRC, London. She is a cost and management accountant by profession with a doctorate in corporate governance. She has successfully completed 3 government-funded projects on sustainable development, livelihood, creation, and uplifting the society. With this introduction, I request Dr. Nandita Mishra, who has always been helpful to the SRSB in doing various projects and various webinars and contributed a lot to the SRSB, to take over and present the SRMM.
Thank you. Thank you so much, sir. Thank you for inviting me. And very good morning, good afternoon, and good evening to everyone. I hope all of you are keeping safe in these troubled times. And I would like to thank ICAI for inviting me to this webinar. I would like to thank President and Vice President, sir, for inviting me, and Chairman and Vice Chairman of SRSB for inviting me to this webinar. I'm so excited and honored to be among such eminent co-panelists. And today's agenda is very pertinent because I believe sustainable development is more important now than it has ever been. Yesterday, we celebrated Earth Day, and somewhere I was reading that in search of gold, which was denoted by Mars, we are losing diamond, which is our Mother Earth. I think COVID-19, this pandemic, has highlighted the interconnectedness between people, planet, and profit, and particularly between health, poverty, climate change, and stability of global financial system. This pandemic has put the S in ESG under microscope and provided a reason to reassess the E. And I believe India will play a very important role in highlighting the importance of sustainable development. Investors worldwide are focusing on sustainable value creation and using capital funds in such a way that it creates measurable impact on ESG issues. Working towards sustainable development is not just responsibility of company heads or country heads, but all of us as individuals. And I'm very happy and proud that ICAI has developed sustainability reporting maturity model, which does not just motivate companies to adopt sustainability reporting, but it also has a clear guidance of how to do it. So I would like to give a very small presentation, and as I would be really very quick in presenting it. So I'll just share my screen. Just give me a second. So because today's agenda is on the model, I will concentrate on the model itself. I hope my screen is now visible. So we will be talking about sustainability reporting maturity model. It is version 1 because with maybe the valuable suggestions we may improve, but I truly believe that it's a very well designed model, and I feel really very proud to be part of this designing. We don't have to discuss about what sustainable development is, because I know everybody knows and do understand, especially after this pandemic, the importance of sustainable development. And I feel proud in saying that India has also been moving in this direction of acknowledging how important sustainable development is. Back in 2009, the Ministry of Corporate Affairs has issued this voluntary guidelines for corporate social responsibility. In 2011, they have come up and they have endorsed the United Nations Human Rights Councils when they adopted the UNGPs. In 2011, the Ministry of Corporate Affairs has issued NVGs, which is National Voluntary Guidelines, which were guidelines on social, environmental, and economic responsibility of business. And in 2012, they have made the BRR reporting compulsory for top 100 listed companies. In 2013, I think this was a very instrumental year when the corporate social responsibility was made mandatory for disclosure in Indian company. And I think India is the only country which does that. Also in 2015, the BRR was now extended and top 500 companies have to report the BRR. we have been extending this application of BRR year on year. And in 2017, SEBI also recommended top 500 companies to adopt integrated reporting, of course, on voluntary basis. In 2019, NVGs were converted to NGRBCs. So we have always been trying to be globally active when it comes to sustainable business. And not just Ministry of Corporate Affairs and SEBI, but ICAI has also played its role in developing and motivating companies to go for more sustainable and more responsible reporting. In 2019, SEBI extended the BRR requirement to top 1,000 listed companies. Now, obviously, to top 1,000, that means many companies are coming under this mandatory requirement. And also, SEBI has formed a committee which worked towards revising this BRR. Now, recently, we all know that in USA, in the Business Roundtable, the statement was there that the business should be, the main purpose of the business should be reconsidered, and it should include or consider society and environment. IFRS has also released a consultation paper which finds that business stakeholders as an urgent need for sustainability reporting. So obviously there is a need and a call for a harmonized sustainability reporting. And I think India has taken a lead when it comes to making sustainability reporting mandatory. So from BRR, now we have shifted to BRSR, which is Business Responsibility Sustainability Reporting. Now, obviously, a question comes, why this shift? Now, this shift is only because we do acknowledge that the responsibility of business has changed, and it is not just being accountable to its investors, but it is accountable to all its shareholders, all its stakeholders, let it be a consumer or an employee or a society at large. A business has to be sustainable to environment and to society. And in the light of these ever-changing the global challenges, we have to change the way we do our business and also the way we report our activities in our annual report. So the BRR and the BRSR, the major difference is that the BRSR is more inclined towards sustainability reporting, and it includes all the latest development which has been done globally and brings it under one single source. So I can say that BRSR reporting is a format which serves as a single source for all non-financial disclosures, and it is in line with the global trends which we see. So BRSR is a one document which covers all the non-financial disclosures. So obviously, if we encourage company or if the companies report through this BRSR, they will be more, they will create more impact, they will have more impact on environment and on the society. So overall, the more companies adopt BRSR, the more we will find business which is responsible to society, business which is not just generating financial benefits, but also developing and making a sustainable development. Now, the format of BRSR, it has three sections. The first section is general disclosure section. The section B talks about management and the process. And section C talks about principle-wise performance. This principle includes, and if you do the mapping, you will find all the SDG disclosures into these principles. So everything, all the SDGs have been covered under these principles. There are 9 principles, but then it covers all the SDGs. Now, obviously, if we think that why do we need a scoring system? Why just not making BRSR mandatory is good enough? I think we do need a scoring system because presently, if we have a BRSR or any non-financial reporting, the question is how can a rating agency or maybe an assurance provider can say that, yes, this report is better than the other one. I think we need a scoring system so that we have a greater assurance, we have a more comprehensive scoring tool which can say that, yes, this is the level is same as the international scales, or I can compare my company with the competitor, or I can compare my company with the international companies. So a scoring mechanism, I think, facilitate and it converts the qualitative information into measurable quantitative data, and this can provide us a comparability index. I think this is really very important. This will just not motivate companies, but will also provide them assurance that they are doing work in the right direction. So providing scoring to what company is disclosing is something which is required, not just to motivate, but to ensure that they are doing a right job. So this scoring system, if we don't have this scoring system, obviously companies then go for consultancy and external assurance process, which sometimes is very costly and companies don't want to do it. So I think this proposed scoring mechanism will simplify the assurance process, and companies can do this self-assessment, whether they are going in the right direction, what is or where they are lagging, and then they can improve on that. So what exactly is this sustainability reporting maturity model? So this is developed by Institute of Chartered Accountant of India, and the board SRSB has done this. This is basically the first version, and it is a self-assessment tool which you can implement on BRSR. It has 4 levels, level 1, 2, 3, and 4, depending on the total score which the company scores on its BRSR. So when I say level 1, that means a company is in the formative stage. When I say level 2, that means a company is in an emerging stage. When I say level 3, it is an established stage. When I say level 4, it is leading by example. So obviously we want companies to be in level 4. And as the president sir rightly said, that when it comes to giving awards, we are just considering level 4. So any company who is in level 3, they are of course motivated to come in level 4 so that they become eligible for these awards. But what are these levels? Level 1 is the level where the company scores 25% of the grand total. I can say 75 marks or 75 score also, but I will tell you why I'm emphasizing on percentage. So level 1 is the formative stage. This means the company has just initiated or just started the reporting process. It has not clearly defined its model, and the policies and the data collection and the disclosure system are in very initial stage. So then they will score, of course, 25% of the grand total. Level 2 is emerging stage, of course, above or better than the formative. So your percentage, your marks is somewhere between 25 to 50. This means that the company has framed the policy, has started doing the disclosures. They have their internal control. They are trying to collect data, but not as much as with what is required. Level 3 is something which we do recognize that yes, company is now has a formal function. They have policies in place. They are doing the disclosure. Established phase means the company should have this scoring above 50 and up to 75% of the total score. Any company who is doing all the disclosures, all the mandatory disclosures, can only have this score. But to go beyond this, you have to lead with examples. In BRSR, there are few provisions which are mandatory, but there are few which are leadership indicators. That means you may disclose it, you may not disclose it. If the company is not going for disclosure of those leadership indicators, then it cannot come in level 4. So that means to come in level 4, to become a leading by example, company should have a very good disclosure system. The company should disclose each and every point in the BRSR, and the company should lead and present a leadership skills, in their disclosures. Not just disclose what is mandatory, but go a step beyond that and maybe disclose anything which is voluntary and not mandatory under BRSR, and to show the leadership skill. So if your score is above 75%, then you lead by example. Now, one thing you must have noticed that I have always said this as percentage. We have a total score of 300, but we do believe that at the end, we will compare or put companies into these levels on the basis of percentage, because we do find that there are few companies for which any particular point is not applicable. For example, air emission or a liquid discharge per unit of production may not be applicable in a service sector. So if I'm giving 9 points for disclosing this, maybe for a service sector, it will be 291, that is 300 minus 9. So therefore, percentage is more relevant. We are not defining it as per the absolute score, but on the percentage. That means this scoring system can be applied to any company, whether that is a manufacturing company or a service company, or maybe a small company or a huge company. It does not matter. So any company can implement this. The only thing is that you should have that gesture and you should be socially responsible. I'm giving a brief preview of the scoring model. Of course, the model is on the whole BRSR. I'm just giving a snapshot of few to make you understand how exactly it works. So as I said, there are 3 sections to BRSR. So for every section, there has been some scores given to it. And as you can see, for example, the first point says the general information about the company, no scores has been given. That means it is not that you are giving a very generic information which is mandatory and you get scores for that. So getting scores is not that easy. So for general information about company, there has not been any score which has been given to that. But for example, if I say that category of employees and workmanship, so if a company is employing differently enabled employees, and if that percentage is more than 5%, then 3 scores, 3 points will be given to that company. If that percentage is between 5 to 2, 2 points will be given to such company. If that kind of employee is less than 2%, 1 score will be given. And if that company is not employing any differently enabled employee, then there will be no score, 0 score given to that company. So in that ways, you can have different scores. So for example, the women employees. So if a company has more than 25% as women employees in their company, so then they can be given a score. So like that. So all the scores, so this is for part A. And again, I will like to bring your notice to this 22A point, which says that CSR. And as I told you that under section 135 of Companies Act in India, it is mandatory to disclose CSR, corporate social responsibility activities. So no score has been given to CSR activities because it is a mandatory act. Every company do disclose it. So no score has been given. Net profit for last 3 years, again, no points has been given because it is mandatory and every company does that. So you have to travel that extra mile to score any point under this scoring system. Similarly, section B talks about management and process disclosure. So if the company is disclosing its policy towards the NGRBCs, which are similar to the SDGs, so then if, for example, they are covering out of 9, 3 principles have been covered, they will be given, so more than 5 principles are covered, they will be given 3 points. If they are covering more than 5, then 1. If they are not reporting any, they will be given 0 point. So like that, every principle or every disclosure is being given scoring. Similarly, when it comes to the principle, that is the section C of this BRSR. So again, this is mandatory. This is something which companies have to report, but then depending on how they are reporting, they will be given scores. So for example, number of training and awareness program, held for this principle. So if there are 3, which is held by, if 3 points are given, if it is held for directors, for key managerial person, employees, and everybody else, then 3 score is given to such companies. If that company is giving training in any of the 2 categories, 2 points is given. In 1 category, 1 point is given. And if there is no such training programs, 0 point is given. So like this, all the scoring has been done for different principles. So there are 9 principles. In every principle, we have some essential indicators and we have leadership indicators. So next, this shows the leadership indicators. And as I told you, this is not mandatory for company to report these leadership indicators. But to have good percentage, to score above 75 in this scoring system, a company must report these leadership indicators, and then only they can be in level 4 of the scoring system. So this is how the whole non-financial reporting of BRSR has been converted into scores. Every point, every section has been associated with scores. If everything mandatory is disclosed, company can maximum score 225, but to go beyond that, they have to score for leadership, and for leadership, they must disclose the leadership indicators, which gives them a total of 300. So this is how it is done. I hope I was able to explain. And if there is any query, any question, most welcome to answer that. Thank you so much.
Thank you, Nandita ji. Indeed, great presentation from your side. And now, before Mr. Terence Jayaratnam takes the charge, it's my proud privilege to introduce him. Mr. Terence Jayaratnam is Senior Advisor for SASB, Sustainability Accounting Standard Board in Australia, and is a member of Technical Working Group of CDSB, Carbon Disclosure Standard Board. He is also partner with EY, Climate Change and Sustainability Team based in Melbourne, and EY Australia's Reconciliation Leader. He is an environmental engineer and sustainability advisory and assurance specialist with over 25 years of experience in advising governments and corporations on sustainability issues. He is an adjunct professor at the University of Southern Queensland. With this, I request Mr. Terence to please go ahead with your presentation, opening remark, and then we'll have some questions which have already come to us for you. Please.
Thank you, Mr. Durgesh, and a big hello to all the distinguished guests of ICAI and the Sustainability Standards Board and all other honourable participants. I was given some prompts to talk through, so that I think the first prompt was around where sustainability reporting is headed. And, you know, I think even from the presentations today, you can see that it's moving at rapid pace, and you've set up a board at the right time. I started working in this space back in late 1990s when I wrote the Australian government guidelines for reporting. And even in that sort of period of 20 odd years, it's moved very, very rapidly. We've got to the point now, and I think there was a mention of the IFRS Foundation looking at a sustainability standards board for the financial accounting space. And that really is the point at which sustainability or ESG disclosures start to become part of corporate financial and accounting language. So, you know, through the last 30 years or so, through GRI and SASB and a range of guidance that's emerged globally, we're finally getting to, I think, integration within standards with corporate disclosure. So it is moving rapidly, and where we're seeing the global trend is that there's been a set of leaders pushing this area for about the last 20 years. I'd say about 10 to 20% of leading corporates. And now we're seeing the big sort of middle group start to look at ESG reporting, integrated reporting, and some form of sustainability reporting. And what we call the mid caps are really starting to move. And that's really the bulk. And I think with your 1,000 companies reporting, you've sort of captured some of that bulk, and the rest will follow. So over the next decade or so, there'll be a lot of movement. And I always sort of look back at financial reporting. So financial reporting's been around for 200 years. And around the mid-1900s, there were generally accepted principles for reporting that were formed, accounting principles. And that was only 70 years ago in financial reporting. And if we then compare that to ESG and sustainability reporting, we've got some generally accepted principles now, and I think it's moving to integration. So it's moving very quickly, and there's a lot of work to be done, and all of the people involved here will have a role to play and contribute into that. I was also asked about SASB and where SASB is headed in terms of promoting sustainable reporting and growing it. SASB was focused for the first 10 years or so on getting sustainability or ESG reporting into Securities and Exchange Commission filings. So they were really focused on the US SEC. For the last 3-4 years, they've gone global. And the beauty of SASB is that it has a strong relationship with investors. So the biggest private equity firms, the BlackRocks and the State Streets, the biggest banks, the biggest investors around the world sit in a investor advisory group and advise SASB on standards. And then they've also got a strong working relationship with corporates. And so that combination globally allows them to focus on material issues per sector. So to explain it simply, what SASB has done is come up with 77 different standards based on industry sectors. And depending on the sector that you sit in, and let's say you sit in food manufacturing, there will be a standard and there will be a technical protocol which lists somewhere between 8 to 12 metrics that you should be reporting on based on investor feedback, based on what investors are looking for, based on the numerous amounts of frameworks and standards around the world. And they've synthesized that information for you sector by sector. And SASB going global has just meant that the take-up globally has been very significant. And the take-up globally is accelerating faster than the US itself. And, you know, you've got the former chair of the SEC on the SASB board, for example. So you've got some of the big names and companies on the SASB organization. And the latest information being that, and Dr. Mishra would be close to this, the International Integrated Reporting Committee and the SASB group have merged or announced merging and completion of merger by the 30th of June this year. And that really, I guess, is another marker for ESG reporting. So I mentioned the IFRS Foundation and the Sustainability Standards Board, and SASB and Integrated Reporting Council merging also is very significant, because what it does is it consolidates this area of growth. And really, I think that merger to all of those who are involved in corporate reporting means that it's a formidable set of standards and guidance to follow. And the IR SASB combination will, I think, eventually be what the Sustainability Standards Board sort of relies on to blaze the way moving forward. So the SASB guidance is really promoting the growth of reporting, and the key way it's promoting it is by synthesizing materiality and making it really simple for organizations to start reporting. Not to give them hundreds of indicators to choose from, but really narrowing and focusing on material ESG issues per sector. The final comment I was going to make is around your tool and what you've announced and brought to the market. I think any such tool in such a rapid growth space is going to help companies work through where their strengths are, where their weaknesses are, where the gaps are, and start to mature through the levels and get better. So I think that's going to be very helpful for the growth of the sector. What we're seeing in terms of drivers and what's going to help make companies use the tools and get better at reporting. And I'll talk from a global point of view. We're seeing legal opinions that say that if company directors don't take ESG issues seriously, they may be held liable, and held liable to the point where, they could be taken through the courts. We're seeing investors requiring information in order to invest. We're seeing sustainability-linked loans and green bonds. That means that there's incentives built in to debt mechanisms. We're also seeing divestment away from those that are not providing the information, those that are in the sectors that may be stranded from a climate context going forward. And we're seeing regulators say that these particular forms of reporting are necessary. So there's a range of drivers, and I can only say that, based on the growth that we've seen in ESG reporting, and I think lots of people have commented about the state of the world. The state of the world has been of concern, but it's now become a core business issue and not so much a corporate responsibility issue. If you can't manage sustainability performance alongside financial performance, you're seen as not a great manager of your company. So I might pause there and see whether there's any additional questions. I'm happy to stay a little bit longer, and I apologize that I need to leave early.
Thank you very much, Torrance. Thank you. I'll request Durgesh ji if there is any question for Terence.
There are some questions for Mr. Terence. Mr. Terence, as you explained well about the various things into the sustainability, can you just share a brief about the current scenario of sustainability reporting and disclosure by the various organizations worldwide?
So I think in addition to what I've said, the growth is really going to be in the mid caps, and the large companies in developed markets are variously reporting well. But we're going to see the growth go from something like 10% of companies in stock exchanges reporting in some stock exchanges to 70 to 80% reporting in the next decade or so. So it is going to be phenomenal, and I think what we will see is standards like SASB make it easier for companies to get on board, and as there will be more examples, as there will be more tools and better guidance, and if the international financial reporting organizations come through with particular reporting requirements, everyone is going to have to report.
Okay. There were some more questions to you. As you talked about the roadmap of the SASB, how that roadmap map is going to accelerate the sustainability reporting and simultaneously how the standards and their materiality perspective help in bringing communications between investors and the corporates.
Yeah, so materiality is one of the key things, and financially, in financial reporting, materiality is also key. So the way I would characterize materiality is, for example, if you take a soft drink manufacturer, in manufacturing, health and safety might be a big material issue, energy might be material, but it might not be that important, or it might be. But if you take a data center, energy is going to be the key issue, and you're not going to have health and safety as one of the most material issues. So what SASB has done is go through and look at materiality, and they've looked at materiality based on what investors are saying. So investors very much focused on commercial returns, saying to SASB, this soft drink manufacturer has some risks embedded in health and safety, has some risks embedded in carbon pricing coming through, has some risk embedded in single-use plastics, and we would like to see information around how this company is moving to address these issues and not have some risks carried forward. That is how SASB is being driven to look at materiality, and in turn saying to companies, these are the material issues, very much investor driven. And so I think SASB is a really good funnel between the global investment community and the corporates in terms of what's important. Now, SASB is also flexible. So there may be 8 metrics for the soft drink manufacturer, but if they're based in a country where water is a significant resource, and SASB hasn't listed water, they are welcome to include water. But equally, if SASB has listed a particular metric that's not relevant to where their operations are, SASB very, very flexible about that company saying, for these reasons, it's not material to us. So I think it's a great flexible tool to communicate what's important to investors, and it's a really good starting point. You can spend a lot of time reading on sustainability reporting, looking at examples, but if you download the sector protocol for your particular sector from SASB, it's a really good starting point around what's important to your company. The other thing that I'd probably recommend is having a look at what they call the Materiality Map. And the Materiality Map in the SASB website is a great way of looking at what's material based on what sector you're in. So I would highly recommend having a look at the Materiality Map. It's interactive.
Great. One more thing which I would like to know from you, that as you said, SRMM is an important tool as it facilitates the evaluation of impact and outcomes of business activities on various environmental and social aspects. How can we convince the organizations to adopt the same, and that higher levels of maturity would be add value and credibility to the organizations when the organization adopt the SRMM? So can you suggest your views on this?
Yeah, no, thank you. I think, your driver in terms of mandatory reporting is something that, as you said, I think a panelist said, it is a global first. There isn't mandatory reporting in Australia. There isn't mandatory reporting in the US. I think that itself is going to drive companies to use the tool, because they're going to want to know, well, if we have to report, we may as well be the best, would be how companies normally operate in the private sector. And so to be the best, you have to look at maturity. And I would think that that's going to be a big driver in terms of the use of the tool. And given that you've invested in developing the tool, I think, you know, as you've done today, you should take every opportunity to promote the use of the tool and you know, show examples of how the tool's helping companies improve their maturity. And then link the tool to other guidance like SASB that's out there that can help companies move from level 3 to level 4. So, you know, link them with global best practice. And I think that will continue to grow the use of the tool. If you also could show, and you know, there are some things that are happening in developed markets like the US and Europe that isn't necessarily, you know, apparent yet in countries like China and India, which is directors being taken to court, which you know, are significant drivers for company directors, or companies being fined, or big divestments. You know, oil and gas companies divesting billions of dollars on the basis of climate risk. And that there are case studies that you can show to companies. And I guess the way I would suggest promoting it is to say, well, these are the examples of corporate impact that we're seeing. And the more mature you get, the more mature you will be in managing these risks going forward. You know, the example I often give is ExxonMobil's lawsuit that's going on in terms of the way the company knew about climate change and how they knew climate change will affect their business model in the US, as opposed to what they told the market. And what's going on is that as part of that business, as part of that lawsuit, company directors through to 1975, ExxonMobil company directors from now back to 1975 are all caught under this lawsuit. Now, if that's not going to scare you from using the tool and getting better and more mature in terms of managing ESG, I don't think what will scare companies.
Thank you very much, Terence.
Thank you very much.
Thank you so much. And we know that it's quite late in Australia. Thank you so much for joining. If your time permits, then you can I will continue to be a panelist. I would. It's my pleasure now to introduce Mr. Sethis Gold, who's a director advocacy at IFAC, and we are receiving continuous support from him in various webinars. Sethis heads the development of international services for professional accountants working in business and industry at IFAC. A key element of his work is developing thought leadership and guidance in support of finance professionals and their roles, facilitating sustainable organizational performance. Before moving to IFAC, he was at the Chartered Institute of Management Accountants, CIMA, responsible for planning and overseeing a program of policy and research. He has worked in various roles in the private and public sector in the UK. We welcome you, Sethis, and thanks for being here today. Our next panelist is C. Raj Malik. He's presently Senior Executive Vice President and Chief Accounts Officer, Reliance Industries Limited. He's also Director of Reliance Project and Property Management Services Limited, a wholly owned subsidiary of Reliance Industries. He's a chartered accountant, cost and management accountant, and a pass out of Stanford University in the emerging CFO program. His professional experience spans over 22 years in the areas of strategic financial planning. Thank you so much, Raj, for taking out time and being present here as a panelist.
Thank you, Sanjeevji.
I also have the pleasure of introducing Ms. Surbhi Gupta, General Manager, Compliance and Monitoring Division, Corporate Finance Department, Security Exchange Board of India. She joined SEBI in 2002 and done Masters in Finance and Control from Lucknow University. She is currently posted in Corporate Finance Department and handles matters related to ESG and corporate governance. Over a career span of 19 years in SEBI, she has worked in various departments and has handled work related to strengthening the regulatory framework for CRAs, policy and inspection of mutual funds, policy related to stock exchange and depository and markets, surveillance. She has also served as member secretary of RBI SEBI Technical Committee on CRAs and has led working groups on matters relating to debenture trustees. She has been representing India and ISCO Supervisory College of CRAs and is currently a part of the working group between India and UK on ESG related issues. Thank you, Surbhi, for taking out time.
Thank you.
And I'm also thankful to Mr. Amarjit Singh ji, who nominated you on our panel. Let me take the first question to Status Gold. So between me and Durgesh Bhai, we will cover the issues for all four panelists. Status, apart from your opening remarks, in your opinion, how are the stakeholders' needs related to sustainability reporting treated by the organizations? As a compliance issue or as a growth opportunity? And how can we contribute to make sustainability fully integrated throughout enterprise, viewed not as an initiative, but rather as the way the enterprise does business?
Well, thank you, Sanjeev, and thank you very much again for the opportunity to be with you and with the ICAI to discuss what is a very important topic for the accountancy profession. So, of course, what you're doing at the ICAI and with the Sustainability Reporting Standards Board is positioning the accountancy profession and your esteemed membership to lead in this area and providing them the tools and the support that they need to lead companies and their clients. So very many congratulations to you in continuing on this journey. Of course, what's very unique, I suppose, about the whole area of sustainability and sustainability reporting, and indeed integrated reporting, is the fact that it's a multi-stakeholder, and you can only do it well with a multi-stakeholder perspective. And of course, accountancy has its roots in the capital markets and protecting investors. So we are getting better and have to be better at understanding stakeholder engagement and participating in that. Because if you look at purpose-driven companies or companies that are doing a very good job of sustainability reporting, but also doing a good job in terms of understanding and communicating their success beyond financial performance, they're very connected to their key stakeholders and are undertaking very meaningful engagement of their stakeholders. So it's very nice to see how stakeholder engagement and stakeholder inclusion has been incorporated in the maturity model, because it's such an important area. So, of course, stakeholder engagement enables the company and of course accountants to be attuned, to be understanding of the key expectations of the stakeholders, their needs, and the trends facing and opportunities and risks facing the company. And I think it's just impossible to do a good job in terms of being a sustainable company and in terms of sustainability and integration reporting without really having a meaningful stakeholder engagement process, because ultimately value and sustainability is defined and judged by your key stakeholders, whether it's your customers, your investors, your suppliers or employees or others. So when we think about sustainable companies, one of the key features of companies that are doing a good job is that their purpose and their mission and how they measure their success is very much framed in a wider stakeholder context, and they start to establish a clear understanding of what they need to deliver to different stakeholders in order for those stakeholders to value what the company is doing, and that obviously enhances the reputation. So it varies by stakeholder, but it's so important to be really aware of what it is stakeholders are expecting and the value proposition of the company to stakeholders. So, for example, with employees, that may mean the key issues may be around, fair pay, safe working environment, creating an innovative place to work that enhances people's satisfaction. With investors, what are they looking for? Are they looking for high dividends, return on invested capital employed? Customers, thinking about what does success look like through the lens of our customers. So are we delivering the products and services that fulfill their needs and societal goals? What is the government? What are regulators looking for from us as a company? So I think purpose-driven companies are very focused on stakeholder engagement to understand what it is they need to be delivering and how they measure success through the lens of different stakeholders. So it was very pleasing to see stakeholder engagement truly embedded as part of the maturity model.
So thank you so much, Jatish. Moving on to Raj. Raj, apart from your opening remarks, I'd also like you to throw some light on how does organizations report sustainability goals and matrices as of now, and how does our model SRMM fit into the overall company vision and mission?
Thank you, Sanjeev. Thank you for the Institute of Chartered Accountants of India for this platform. I think this is the need of the day. We need to create awareness. So since I am from industry, and if I echo the sentiments of industry, we all know that although sustainability reporting is globally around a decade old, but in India it is relatively new. But my understanding is, that India has picked up very fast. I mean, our speed of at which the companies have adopted this sustainability reporting is, I think, it should be quite satisfactory. As far as corporates are concerned, I can tell you, the corporates have realized the importance of sustainability. They have realized only reporting of financial numbers is not enough. The investor community is looking at something else. I would like to refer to the last letter of Larry Fink, the CEO of BlackRock. He specifically said that climate risk is investment risk. At the same time, he says that climate transition presents a very historic investment opportunity. I think these are more or less the sentiments that our leadership team of Indian corporates understand. And in fact, if they don't understand, the investor community will force them to understand. That is even more important. So as a result, if you see that that we have considered or we have taken up this reporting is quite fast. Yes, the environment is legal environment is created. SEBI has made BRR, that is business responsibility report mandatory for all the entities. Sustainability report is, it's a voluntary practice which is based on GRI sustainability reporting standard. And so far my knowledge goes, I have done a deep survey in the industry, and I understand around 400 to 450 entities, large entities, are voluntarily taken up this GRI sustainability reporting standard. I think which is quite good, quite satisfactory. As far as integrated reporting framework concerned, that is also very fast being accepted by the Indian corporates. I understand it's in 2018 it was around 30. Then currently it will be around 50 to 60 entities will be reporting in their annual reporting integrated reporting framework, which basically follows the 6 capital and IR framework and 6 capitals, which is very easy to report, and which is very understand. It is easy for understand the stakeholders about the sustainability. So sustainability is the thing that Indian corporates have taken up very seriously, and even if they don't take up seriously, I think the investor community will make them take seriously. That is what my take on this topic, sir.
Thank you so much, Raj. We'll come back to both Jatish and Raj again. I would request Durgesh Bhai. Durgesh Bhai, if you're there, if you can take up the next question to Ms. Surabhi Gupta, and then one to Dr. Nandita Mishra.
I think you can continue with
Sure.
taking to Surbhi Gupta ji.
Sure,
Then
yeah,
I'll take with Nandita.
Fine.
Yeah.
Thank you. Ms. Surbhi Gupta, first of all, thanks for joining. You're joining us for the first time. We welcome you at ICAI. And apart from your opening remarks, this BRR is aimed at bringing greater transparency through disclosure of material ESG related information. How will the various aspects of diverse sectors, including pharma, chemical, IT, and financial services, with respect to identification and assessment of sustainability related risks and opportunities, be addressed?
Thank you very much. So I've been hearing everyone that we are suddenly jumping into ESG. But I would say that the awareness around ESG was there since a long time. The only thing that changed in 2020 is that the needle has stepped faster towards ESG. And I also would want to say that we are not far behind from what the global community is, because even we had started sustainability reporting long back in 2012. And while most of the global countries are still, they are getting it reporting based on a compliant explain basis, we have been right from the start being focused into such kind of reportings on a mandatory basis. So we are way ahead and probably one of the early adopters of ESG reporting in terms of being mandatory focused. Also, I would like to bring to your attention is that most of the global companies are focused more on climate related disclosures and are largely aligned with TCFD. Whereas in India, we have climate plus disclosure. So we are not only focusing on climate, we are also focusing on social factors, social inclusion, and going beyond what the climate disclosures are. So we are way ahead, and obviously the BRSR format that is there on the public consultation, as you would know, to come on to your question, how would we address the sector specific needs? So the format that is up for public consultation is more of a generic format. We are basically sector agnostic. So and we know that one size fits all may not work. So the option that we have given to the reporters, the companies, is that in case any factor is not relevant to you, you state that it is not applicable and also give the reasons as to why it is not applicable for the investors to understand as to why it is not being reported. And also we have, since largely many companies are reporting based on global standards, so we have also brought about interoperability. So if you are reporting in, say, GRI or SASB format, then while reporting in BRSR, you can just cross-reference those reports and you may not have to duplicate things. So yes, while we are not focused on sector, but the leeway is there with the company to say that that particular matrix is not applicable to them, and maybe give more relevant matrix which they think is should be reported. So that flexibility is being given.
Thank you very much, Surbhi. Durgesh bhai, you can take up the next question to Dr. Nandita.
Yeah. So, Nandita ji, there is one question for you. In your opinion, how does adopting integrated reporting and practicing integrated thinking provides and deliver better ESG information to stakeholders? How are businesses adopting the same globally?
Yeah, because today everybody is talking about ESG, and I truly believe that sustainability reporting reports ESG, but sometimes it fails to provide that link between sustainability issues and the organization core strategy. So I think integrated reporting enables a company to articulate how the ESG practices are connected with its financial and business performance. And it allows the stakeholders to better understand that how the company's ESG is creating value. Because see, at the end of the day, business is not just about ESG, but it is about financial benefits and business performance also. So I think this interconnectivity of 6 capitals this present a very clear communication as how companies creating value. And this is something which stakeholders want to know about the company. They want to know that ESG information is there, but what is the holistic picture and how the company is interconnecting this into the business model. So if we speak of ESG, then we must speak of risk associated to those ESG. And if we are speaking about risk associated to ESG, then I think IR framework allows you to tell that how you handle those risks. And therefore, I think there is adoption of IR framework in more than 2,500 organizations in over 70 countries. So I think we are the framework is handling the ESG disclosure very well, which speaks because of the adoption which we see around the world.
Great. There is one more question for you. SRM based on BRSR scoring would serve towards assessment of businesses and serves as a signal of market sentiments. What transformative role business need to portray in this regard?
I think, sometimes companies are truly committed to sustainable issues, whereas there are some companies who are kind of making a greenwashing. I think once a company adopts this model, it will ensure that the companies is doing their bit. And this will motivate the company who are actually working towards sustainability. And this will also draw a line between one who are just doing as a tick box exercise and the one who are doing it, who are the actual doers. So I think this model brings this clarity and also will bring clarity in the mind of investors that this is how company is doing, how company is performing when it comes to sustainability issues, because now not just investors but all the stakeholders are interested in knowing that how companies are doing. And then I believe that because we don't have to go to an external assurance provider, a company can do it. Like it's a self-assessment model. So company can assess that where exactly the business is, how they are doing, and how they can improve. So I think this will definitely transform their business, their reporting, and their value creation business model.
Thank you, Nandita. Over to Chairman, sir.
Thank you very much, Dr. Nandita and Durgesh Bhai. Seth, moving on to you again. What potential do you see in our sustainability reporting maturity model for supporting the various processes and laying a strong foundation for organization on their sustainability journeys, aiding the overall transformation of business? And do you have any suggestions that what we can further improvise for our SRMM 2.0 version, which we will come out in a few months?
Thank you, Sanjeev. So I think the maturity model provides a very strong foundation for an organization on their sustainability journey to ensure that they're tracking the right data and collecting the right information, and are therefore aligned to the requirements of the business responsibility and sustainability reporting requirements. So I think that the tool is practical and should help improve companies and their accountants to ensure that they are collecting the right data and have the processes that are required and the controls needed to support confidence in that data. So I think that's really important, and I really do like how the approach can really show where improvements are needed and where there are gaps in the organization. And ultimately, if there's a critical mass of companies doing it, I think, as you've indicated, it will allow different stakeholders to benchmark the sustainable management and reporting maturity of the organization, whether that's rating agencies, investors or others. So I think from that perspective, there's enormous potential for this tool in India. But I really do think the point that Dr. Nandita Mishra has raised is a very good one. And I would just re-emphasize how this tool is just, I suppose, provides the data that is an important basis for then formulating strategies and processes for responding to and incorporating where there are sustainability opportunities and risks into the organization. So I think the critical role for accountants is then bringing together and bridging the sustainability part of the performance and organization to the strategic, operational, and then financial part of the business. So what does this data then mean for our strategy? For what does it tell us about our opportunities and risks? And then how do we connect that to our business model and then make decisions around and incorporate that information into the things that are critical to mainstreaming sustainability? So, in terms of where we're allocating investments in our organization, in terms of CapEx, for example, in terms of business cases for new products and services. So how do we then bring that information from the maturity model into those mainstream corporate processes for making decisions, for allocating finance, which really is where the rubber hits the road in terms of whether we're a sustainable company or not. And then, of course, as accountants, what are the impacts on the accounting estimates and judgments of these things? Do we in our financial reporting, if it's climate risk, for example, are there implications for impairment or useful asset lives for our inventory? For example, we as accountants have to then connect and make sure that we're reflecting these opportunities and risks in our accounting estimates and judgments and incorporating it into our financial statement reporting. And of course, there's a huge role for our audit colleagues and insurance practitioners in providing confidence in this data. And I think, of course, the maturity model provides a basis for improving the processes and controls around these data points. So should make assurance a little bit easier, I think, as well. So that's another important benefit. But I think just to recapture that point of connecting this ESG sustainability data to the core sort of management processes in the organization is really so important. And that's really where the accountant drives forward integrated thinking and integrated reporting.
So thank you so much, Stethis. Let me come to you, Raj, and I'm asking this question on SRMM to all the panelists. Do you think that this SRMM will be useful for companies, and do you have suggestions for the improvements?
SRMM, as the model we have seen, it's first of all, it's a scientific tool. Secondly, it is a very detailed tool. And one of the biggest thing is that it is, in my opinion, it is applicable across the industries. See, because the important thing is it is not based on number, it is based on percentage. Suppose it recognizes that industries are different. So some of the parameters or criteria will be applicable to some industry, some may not be applicable to some industry. If some of the criteria is not applicable to some industry, that goes off. So the total marking also goes up, and the mark that he gets, that the industry gets, also goes up. And so his percentage terms, he will be always be competitive with the industry which has all the criteria and parameters and tested. So that's a unique thing. It's a very good thing that it can be tested across the industry. Secondly, the management also feels, or everyone wants to know where we are. So these tools give idea comprehensive answer where you are, level 1, level 2, level 3, level 4, and And important is what you need to do to move to the next level. That is very important. So it will help the management to give a roadmap. So that way it is very helpful. Thirdly, I will tell you that that we corporates have to face our analysts and investors very frequently in the meet. And in those things, the corporate analyst, the investors analysts ask a lot of questions. And one of the areas that they keep on asking questions these days, and the number of questions, the frequency are increasing, is on the sustainability, one of the ESG. And as one of our co-panelists has told about that greenwashing, I mean, they also are very, whether it's greenwashing or the companies that really do something on that front. And corporates find it difficult to answer sometimes, difficult to convince sometimes, and we have to spend a lot of time and effort answering and convincing and persuading the investor analyst community. I think the proof of the pudding will be the day that corporates will come up and say, okay, you want to evaluate my ESG, my score of SRMM is this, so you test me this. So if we can reach at that maturity level, I think I will say it will do a great service to the Indian industry.
Thank you so much, Raj. Moving on to you, Surbhi. And I'd like to know the regulator's perspective, because MCA and SEBI both were signatory to the BRSR. What is your perspective on our sustainability reporting maturity model? Do you think as a tool it will assist and encourage corporates to enhance the quality of sustainability reporting?
Yeah, actually, my thoughts are already echoed by my fellow panelists. It will definitely help. I think it will also help companies to engage more with stakeholders and make them look beyond financial parameters also. It will, so at one hand, while it will help corporates, it will help the investors also to maybe provide some kind of assurance because there's a scoring mechanism. While institutional investors are very adept in reading sustainability reports, I think such kind of model would help even non-institutional investors to actually read that sustainability report and understand based on your model. Then I think it will also act as awareness thing, because if a company which is getting a level 1 score would get inspired to actually level up their disclosures and come up to level 2 or level 3. So yes, it will aid in awareness, the reading of the reports, and would also help the companies to engage with stakeholders.
Thank you so much, Surbhi. I would request Durgesh Bhai to take up the next question to Dr. Nandita.
One more questions to Nandita. And that one is, the IRRC published provisions to the IR framework in January 21 to enable more decisionful and useful reporting. Can you brief the major changes in IRC framework?
Yeah. I think the new IR framework, it's a result of an extensive market consultation. We have gone to around 1,500 individuals and in around 55 jurisdictions. And the consultation demonstrated that the conceptual thinking and the principle of IR framework remains fit for the purpose, and it's robust. So there are not any big changes to the framework, just a few clarifications and minor changes, but a very significant ones, I would say. The new IR framework focuses more on simplification of few statements, which relates to the responsibility of integrated report. The new IR framework also provides insight into the quality and integrity of underlying reporting process. The new framework has made a clear distinction between output and outcome, and we have also given few examples of few industries to it to make it very clear to the adopters that what is the difference between outcome and output. There has also been a great emphasis on balanced reporting of outcome, how that can be done. And the most important, which I feel, or which personally I believe was very important, which is added in the IR framework now, is that it talks about value erosion and value preservation. So it tells that how value can be eroded and how a company can preserve that. So it talks about various scenarios of how erosion is done, and also talks about various ways in which it can be preserved. So it is not just talking about value creation. So I think now it is more clear, and the new framework has cleared all the confusions, if at all it was. So I think it is more easy to adopt and more comprehensive.
Great, thank you. Over to Sanjeev bhai.
Thank you, Dr. Nandita and Durgesh bhai. Status, accountants need new knowledge to apply their skills to work in increasingly technical areas such as impact reporting, calculating an organization's carbon footprint, and to open up their work to new opportunities for collaboration across diverse disciplines. And accountants love this. What role will you identify for ICAI? What role can we play in this regard? What role our members can play in this regard?
Thank you, Sanjeev. Well, of course, you're performing the most important role of an esteemed professional institute, which is to position the profession to lead and enabling your membership to move into these new areas. So for that, I think your proactiveness and your willingness to set the agenda and to develop practical tools to support your members and the standards to help direct them is extremely important. So I think with this particular area of sustainability and ESG, what's interesting is that the professional underpinning and education that you provide your members means that they already have the foundational skills and competencies, I think, to support companies and clients in managing more than just financial performance. So that foundational skill set in terms of preparing information and data, ensuring that underlying processes are robust and reliable, assurance skills and competencies, and providing analysis and insights based on data. They're all the hallmarks of a professional accountant. So I think what we're doing here globally as IFAC, and also with our members like the ICAI, is trying to ensure that professional accountants and your members have access to the knowledge and awareness of new areas and new topics. That will obviously require literacy and understanding of different disciplines. And this is a lifelong journey, I would suggest, and something that can't be achieved overnight, because we're always continually learning and these areas are always continually evolving. So I think it's an important and exciting opportunity for professional accountants to help sustainability and the sustainable business agenda going forward. So I think in terms of what the ICAI is doing, of course, I think the combination of ensuring that there are standards and clear requirements, which I think is generally welcomed by accountants and the capital markets and investors. So, of course, IFAC at the global international level has been campaigning for a global solution to ensure a baseline of standards for sustainability information at the international level. So we have comparability, consistency and reliability of information. And of course, your role is critical in ensuring that you have jurisdictional relevant standards that work for India. And so I think, as was said before, India has come a long way because it has made certain requirements mandatory, which is really driving forward progress, I believe, in India. So your continued advocacy, I think, and influence on the global and international stage is hugely important to make sure that we come to the right, we have the right corporate reporting system at that global level. And of course, at the moment, the discussions that we're having is very much focused on the IFRS Foundation establishing a new board to oversee the development of global standards. So your continued involvement and advocacy in the international scene is incredibly important, also to bring the learning that you have from India. And then, of course, supporting your members to expand their horizons and their skills and knowledge, really, I think, in these broader areas is extremely important. But I would just finish by saying, I think, that one of the most important things about these broader areas outside of financial reporting is that sustainability in particular is such a multidisciplinary undertaking. And to understand ESG and sustainability performance, I think requires different groups of professionals and experts working very closely together. And I think for accountants, this will be one of the biggest changes for them in particularly working in business, but also in the accounting firms where you're providing advisory and assurance services around sustainability. Those teams are very multidisciplinary. You need people with different perspectives, with different disciplines and professional skills to come together to help bring this information and the understanding that is needed together.
Thank you so much, Sethis. And I'm happy to share with all the panelists that participants from India, California, Philippines, Muscat, Dubai, New Zealand, New York are already live, and more than 1,800 plus members are watching this global webinar. Moving on to you, Raj, what is the boardroom discussion on sustainability? The measurements are, of course, prospective, positive, effective. But, what is the role of boards in catalyzing the corporate sustainability strategy? And what is the thinking in their mind as of now?
I think that Indian corporates, definitely large ones, even the medium size corporates also understood the importance of sustainability. There is a lot of push from the investor analyst community to actually disclose about the sustainability data, and that makes the board even more aware of that. So I think all the boards, take sustainability very seriously. I think there will be no board in a corporate which says that I will not look after sustainability. I will only look after PAT and PBT and EBITDA and ROC, and that's it. I think those are not there. Yes, greenwashing is there. People try to put themselves in the bitter light. Okay, that is the human tendency that will be there. But in overall perspective, yes, we are moving to an era where sustainability is being very important. We are moving to an era where corporates have realized that it is their responsibility to be sustainable, to work towards sustainability, to work towards ESG. Otherwise, they will be, that the investor community will not take them seriously. They will not get investment. I think very soon a situation will come that, before a big fund house invest, they will try to get a sustainable data, and if you don't have a score, a certain amount of score, they will say will not invest on you. So the board is, I think, aware of that. We are moving toward that direction. So the board takes this sustainability very seriously at this point of time.
Thank you, Raj. I expected this answer. Moving on to you, Surbhi. What is the thought process in SEBI to make it mandatory, say, for all listed companies, and at least the light version, if not the comprehensive version, and then beyond listed company to the unlisted companies?
Okay, so as you know that we have gone for a public consultation. So these applicability has been set up after extensive consultation with public, where we received comments from industry bodies, corporates, rating agencies. We received comments from even international standard setters, international investors. We also had a one-to-one meeting with again SCSV, GRI. After that, to understand the global perspective, we also did a benchmarking exercise. So we went through TCFD, SCSV, GRI, all important standards, try to take good practices, good disclosures from there, try to integrate it, see how it is relevant to our markets. After doing all this, we also had a roundtable with corporates to understand their preparedness on such kind of disclosures, the measurability, how much it is relevant to our country or our sectors. And after this extensive consultation, first of all, the public consultation, the paper that is on public consultation has been revamped a lot after this benchmarking exercise and public consultation. So the disclosures have been made more granular, more enhanced, and therefore checking the preparedness was important. And after checking the preparedness and the amount of comparability, measurability that is there, we decided that we should give the companies some time, probably a year, to make them aware of what the disclosures are and then make it mandatory. We have currently kept it at top 1,000 companies only because currently in our markets, if you look at the earlier BRR, it's more of a qualitative disclosures. We are suddenly moving to more granular and quantitative disclosures. So in order to make the smaller companies more adaptable, and since they are not currently in that frame of measuring this kind of disclosures, they need probably more time to get into it. So as a prudence sake, we thought it right to first make it mandatory for 1,000 companies, let them act as leaders, let them inspire others to adapt such kind of business sustainability reporting, and then gradually we move on to other companies also. Unlisted companies, something that is not in our remit, and probably MCA will have to decide on that. So this is how it is going.
Thank you so much, Surbhi. I would request Durgesh Bhai to ask the final question to Dr. Nandita Mishra. It's time for the closure. Durgesh Bhai, you're on mute.
Sorry. Nandita ji, with these last questions, thereafter will be nearing to the closure of the program. So the question is like this: in your opinion, what goals, for example, compliance, best in class, or leadership would motivate more and more businesses to adopt sustainability reporting maturity model?
See, I believe the model itself is very easy to adopt, and the model itself is motivating, and companies will adopt it. Reason being, every company want to know that whether they are doing it in a right direction or not, and if the model, because it is so easy, you can understand by reading, and it is very easy for companies to adopt. So if anything which is very easy to adopt, which has got such a wide application, which is so comprehensive, so that itself, I think, motivates company to adopt it. And then it's a win-win situation for a company. If they assess themselves, they know that where exactly they are lagging behind, and then they can work on it. And obviously, because sustainability is talk of the day, so companies also, as I think Mr. Raj said it very correctly, that there is no board who is not talking about sustainability. And if a model can help a company in achieving their sustainable goals or making a very transparent, comprehensive reporting, so I think any such kind of model will always be beneficial for the company, and that itself motivates company to adopt it. So I think it is going to be a success in Indian market, and we should try to do the mapping and take it internationally also.
Thank you, Nandita. Thank you, Chairman sir. Let's move
Durgesh
to
Bhai, before you give a formal vote of thanks, my sincere thanks to all the panelists, Stethis Gold, Surbhi, Dr. Nandita Mishra, Raj Malik, and of course those who have left the panel now because of the time zones. and this is being held in such time when India is reeling under the second wave of COVID-19. And I think truly a topic for the times and for the times to come. And I would wish everyone a healthy and happy times. Of course, I'll say that stay healthy and stay safe. That is the need of the hour, and stay inside your homes. That's the best safety for those who are living in all those zones. Over to you, Durgesh Bhai.
Thank you, Chairman, sir. It's indeed a need of today that one should stay at home, stay healthy, and stay safe, and stay blessed too. So with this, friends, I'm sure that the deliberation at the global webinar were indeed enriching for one and all present, and I'm sure that the thoughts and views expressed on this crucial topic of global importance would enlighten all the accounting fraternity across the globe. Dr. Nandita gave a very insightful presentation on SRMM and explained critical aspect of the model. Mr. Terence gave us perspective on the global drivers of the sustainability reporting and how it has evolved as a core business issue. Mr. Stathis Gold explained that sustainability is a multi-stakeholder engagement and accountant have a crucial role to play. And Surabhi Gupta ji brought clarity on the industry-specific applications of the BRSR and how Indian corporates are meeting the global benchmark. So I'm sure that the sustainable reporting maturity model, which has been discussed today, will bring forward the sustainability performance of an entity through disclosures in the business report responsibility and sustainability report. SRMM enables comparison of the various organizations' performance with respect to the sustainability on the basis of percentage, score, and also the level of maturity into which the entity categorized into it. Friends, professional accountants have a prominent role in playing the relevant guidelines and the processes for measuring the sustainability performance and thereby promoting the business to line themselves with the sustainability consideration. I would like to thank in absentia Sri Ganeshwar Singh ji, Mr. Stathis Gold, Mr. Terence, Jay Ratnam, CA Raj Malik, and Ms. Surabhi Gupta for presenting their enriching insight on the emerging landscape of SRMM. I am also thankful to Dr. Nandita Mishra for presenting the model in a simple and understandable manner and for our immensely useful deliberation on SRMM. I would also like to thank in absentia our President Sir and Vice President Sir for their thought, leadership and encouragement for taking up new initiatives in SRSV. I would also like to compliment our Chairman, Dr. Sanjeev Singhal, for his passion in promoting sustainability agenda for the profession and our stakeholder. As he said that our all buildings are going to be the green building and the majority building are going to be the 5-star green building. I also thank all the participants of Global Webinar for their patient listening. I urge our members to induct and drive the entities towards the evolving sustainability landscape. With this, I thank you one and all, and namaste.
Thank you very much. Namaste and greetings.
Thank you very much.
Thank you.